So it's a little bit of a holiday season for water resource districts, and I'm referring to the annual auditing process, right? That we go through, some of us on an annual basis, some less frequently. But so we do have the pleasure of having Dan Cox and Josh Gallion from the State Auditor's Office with us today, and describe some of the requirements and details of that process. So we certainly appreciate of them joining us today. Josh Gallion was elected in November of 2016 to serve as North Dakota's 17th state auditor. Originally hailing from Spokane, Washington, he served in the United States Air Force at the Minot Air Force Base from 1998 to 2002. His education includes an associate degree from Bismarck State College, Bachelor of Science degrees in Accounting and Business Administration from Dickinson State University, and a Master of Business Administration degree from the University of North Dakota. Dan Cox is a Quality Assurance Manager at the North Dakota State Auditor's Office. Dan is responsible for ensuring our own audits meet the government audit standards in addition to the audits done by private firms. He oversees the quality of the audits in the state agencies, the university system, and all local governments across the state. Dan has worked for North Dakota State Auditor's Office for over 25 years and is a certified public accountant. He has worked extensively both on the financial and performance auditing standards. So please help me welcome Dan and Josh.
Gosh, thank you for having us. Very excited to be here. I'm Josh. That's Dan. Just to clarify. So just to do, appreciate the introductions as well. So today what we want to talk a little bit about is for the water resource districts, component units. Dan wants to talk a little bit about some of the great things that are happening with legislation. We'll want to talk a little bit about the most recent audit summit we had yesterday and some of the information that was there. We want to talk a little bit about federal funding and some of the single audit issues that can arise. But before I want to get into some of these things, I thought I would just kind of share a little story. So in the bio, I mentioned that I'm a U.S. Air Force veteran. I served at Minot Air Force Base. That's what brought me to North Dakota. And as a 19-year-old kid, back then I thought, oh my gosh, at first after looking up where it was on a map, I thought this is the worst thing that could have ever happened to me. My best years were behind me. This is where everything ended. Who would have thought that this is where I met my wife? She was up in Minot. She's from Bismarck. And then 20 some odd years later, this would still be home. So I've lived in North Dakota now longer than I've ever lived anywhere else. And so I love North Dakota. I'm very happy to be here, very honored to serve the citizens as their state auditor. One of the things as I think about water resource districts and how important water is was back when I served in the military in the late 90s and early 2000s, a lot of the folks that I served with were Gulf War veterans who went off to war to fight over oil. And a lot of these individuals would talk about what's going to happen in the future. And the things that they would talk about were not future wars over oil, but future conflicts over clean water. And that was a big discussion from my senior NCOs and some of the officers, is that water is going to be the most vital resource in the future, even more so than the oil that we went across oceans to defend. So thank you for what you do. It is a vital resource. It's extremely important to all of us. We can't live without it. But I just thought I would kind of share that even over 20 years ago, that was something that was being talked about, was how important protecting and preserving our water resources were. So before I pass it off to Dan, one of our highly qualified individuals in the auditor's office. We've been around a couple years. I think we're probably at that stage in our careers where we don't like to talk about the years of experience. I don't know if we view that as a positive anymore. My hair color resembles a lot of that now. That's why I keep it so short, so you can't tell that it's changing color on me. But we've both been around the block, and Dan's been a vital member of the auditor's office for, we'll just say, more than a couple years. There's probably not a process in the auditor's office that he has not touched. There's not a state agency that he hasn't audited, and he has been involved not just with the state agency performance audits. He is instrumental in our work at local government levels, and that's what he's going to talk to you about today, is some of the requirements on those local, some of our local clients. What I want to hit on is some of the discussions that we've had in the auditor's office is about component units. And I don't know if that's a term that any of you are familiar with. When we look at audits and our clients, you'll have a primary government. A lot of times a primary government entity is going to be, say, a county. A county would be considered the primary government, and potentially a water resource district could be considered a component unit. Now, there's a few things that I'll share, and Dan's going to provide some other information and details. But whether or not you would be a component unit or potentially even your own primary government, there's a few factors that you could consider. So when you want to look at or think about whether or not you're a component unit or a primary government, the first thing you want to try to understand is financial control. Who approves the budget? If you were to assess a mill levy, who is going to approve that? Is it your own independent board, or does that have to go before a county government? That could be a factor in determining whether or not you're a component unit. Legal responsibility. If somebody wanted to sue the water resource district, would they be able to sue you independently, or would you be attached to a lawsuit? That's another factor that you would want to consider, whether or not you're independent or not. The third one is governance. How is the board elected? Are they elected directly by the citizens? Or do you have a majority? A lot of times we'll see the city or the county government will appoint a majority voting group of the board. So if say the county is appointing 3 of those members and 2 are either selected or elected, the county chooses the majority voting part of that board. That's another factor in whether or not you're a component unit. The reason why we bring these up, and what we wanted to talk about some of this today, is there's been a lot of demand on the auditor's office time. And we have a lot of clients out there who they may want their own independent audit, but we're at a point where we can no longer do some of these audits because of our client list. We have about 40 entities on our waiting list. If the entity is a component unit, what we are going to start requiring is that audit be conducted with the primary government. And that's why I want to share some of this information with you today, and again, with what Dan's going to cover a little bit about. Those audits, when we can conduct those with the primary government, there are still procedures that are going to look at your operations, but it's going to save time on your part. It saves time on our part. It also reduces the overall cost. Because anytime we start an audit, there are required procedures for every single one of those. There's things that we have to do regardless at the beginning of that audit. When we can combine those 2 entities, the primary government and component units, we can save on those required audit steps. Again, that saves us time. And with our client list and our wait lists, the more clients that we can try to get off that wait list and get to, the better that we can respond to them. We can get them their audited financial statements, which those are needed if there needs to be a bond or debt taken on. Those financial institutions want to see audited financial statements. And I know Dan can probably provide some of this. He's got it off the top of his head, but we have a lot of local governments out there that are behind in getting those audits. There's approximately 2,000 local government entities in the state of North Dakota that we work with. About 400 of those require audits. And cumulatively, we are hundreds of years behind in getting those audits done, not just with the auditor's office, but our private partners out there who conduct those services. So we have quite a backlog. So not just a waiting list for our current clients, but every single one of those entities out there is probably a year, 2. We have some that haven't had an audit done in over 10 years. And so we are actively trying to work to get those people caught up, because what happens is if they don't get those audited financial statements, it puts that local entity in a bind. So I'm going to pass it off to Dan just to cover a few of these things, and he's going to give you a lot more information because, he is kind of a big deal. So, all right, thanks.
And while Josh made the comment that he keeps his hair short so that you can't tell that he's older, obviously that doesn't work for me. So, but just wanted to touch on a few different things as Josh had brought up. He did bring up about the federal money, so I just want to point out, for any of you that do get federal revenue of any sort, whether you get it directly or you get it as a pass-through from some other entity, that to keep in mind that if you do receive more than $750,000, or receive and expend, I should say, if you spend more than $750,000 in any given year, then you are required to get what's called an annual single audit. And basically, that's an audit that the federal government requires for those entities that receive money and spend, well, their money that they allocated out to you in whatever form you got it. And there's certain compliance requirements that the auditors have to go through to check to make sure that that money was spent in accordance with federal guidelines. And that's because, of course, if the federal government gives you money, there are strings attached. And the federal government wants to make sure that those strings are being followed. So keep that in mind if you do get any federal revenue of any sort and you spend out more than $750,000, not just from a single source, but collectively, even if you get it from different sources, collectively, if that pertains to you, then you would be required to get an annual single audit. So just wanted to make that note. Josh also mentioned we just had our audit summit yesterday. I don't know if any of you participated in that or not. It was a virtual event, but wanted to mention it because of the fact that we also record it. And it's not yet, but it will soon be up on our channel, website, YouTube?
YouTube channel.
Okay, so it'll be up on our YouTube channel in not too distant future. It might warrant going out and at least taking a look at the different sections that are there. There might be some of the sections in there that might be applicable to you in your area of overseeing the water districts. So there's that. One of the things I want to talk about, I talked briefly with our audit manager that does a lot of the local government audits or oversees the local government audits, and just kind of asked them, what is one issue, when we are doing, because we do several water district audits ourselves, as well, the ones that we don't do come to our office and we oversee those. But ask them, of the ones that we do, what's one of the issues that you see come up most often? And his quick response to that was the special assessments for those drainage projects. And so I just want to touch on that briefly, just to bring to your attention that for those drainage projects where you have those specials that you assess in order to collect the money to pay for that project, make sure that you have, whatever that structure looks like for you, that you have good accounting practices in place for tracking those specials. You guys all know how that works. You have a drainage project, whichever landowners are affected by that, they get assessed the specials over a period of time, whether it's 10 years or what have you, and then they pay for that. If one of the things that we see happen on occasion is where somebody will pay it off early, right? And that is so that they can save themselves the interest on those payments over a period of time. So sometimes the landowners will just want to pay that off early ahead of time. And that's to make sure that that's properly recorded on their behalf to that particular drainage project, because again, they may be paying specials on multiple different drainage projects, depending on how that figure works out. But to make sure that that does get credited to them in that regard, so that they're not billed then subsequently after having paid it off. And we have noticed that a few times. And so just want to bring that to your attention, make sure that you have good accounting practices in place so that that happens. And it could even be a scenario where the landowner might not even be aware of it, especially if they don't live right in that county or even in the state. They may just pay whatever comes in the mail. They may or may not even be checking on what this is for. Is it related to something they've already paid off? Another thing in related to these special assessment projects is that, and really these things should be tracked in a special revenue fund so that they're separate from your other activity. That's the easiest way for you to keep track of what's coming in to make sure that it covers those costs. And the thing with those is that when it comes to the end, when that project is complete, it's paid for, let's say it's over a 10-year period of time, when that 10 years is up, more than likely you're going to have some residual amount still left in that fund for that project. Because you can't, you're collecting the money, you're making the payments back, whatever your source was, whether it was from your own reserves or from loan money taken out, what have you. That residual money that's left over, then there's one of two things that you can do with that. And one of those is if you close out that project, you're done with it, you're not going to need that project anymore. The best thing to do there is just whatever that residual amount is, to close that out back to your general fund. Okay, and all local governments have a general fund. That's your catch-all, if you will. And so that's probably the best thing to do if you're closing out, is to close it back to that general fund. It is possible, I will mention this, besides the special assessments for drainage, for new drainage projects, sometimes you can have special assessments for ongoing maintenance of some of those drainage projects. If you know that that's the case, or that will be the case, or likely to be the case for that particular drainage project, that there could be a maintenance assessed after it, it's okay to leave that money in that fund so that when the maintenance comes in, whatever amount you had left over from payments for the drainage project could then pay down some of that maintenance, so then not as much necessarily has to be charged to those same individuals for that ongoing maintenance. You can use that money for that. So that is an acceptable thing to do too. The one thing that we don't want to see, and you don't want to do, is to transfer that amount. I mentioned you could transfer it to the general fund. What we don't want to see is that you transfer it to any other drainage project. And that's because you have a different mix of people that are affected by those different drainage projects. And so you don't want to take the money, because again, the residual money that's left over after the project is complete, that amount has come from a subset of individuals, and it wouldn't be right then to take that and apply it to a different project, a different assessment that has a different subset of people. So that's just something to keep in mind. I just wanted to mention that for special assessments, as that is an issue that commonly comes up when we are looking at water resource districts. So then from there, I want to mention Senate Bill 2180. So this was probably the bill that had the biggest impact on our office this last session. And basically what that bill does, it does a lot of things, but the thing that it does that affects local governments, and affects even some of you probably here in this room, was it changed the audit threshold. So the audit threshold in the past years, was set at $300,000. So anything above, if you, in total revenue, if you receive anything from whatever source, anything above $300,000, you are required to get an audit. If you were below $300,000, you could submit an annual financial report to our office. Okay, and those audits, just so you're aware, they don't have to be an annual audit. The Century Code does provide that can be a biannual audit, so once every 2 years. So we last session, not the session that just ended, but the previous session, back in 21, we recognized that level was too low. And too many people were having to pay for an audit. With the increasing number of standards that come out every year, audit standards are what we have to audit by. There's the GASB that puts out these things, the GAO, Government Accountability Office. These are national organizations that put out the audit standards that we have to audit by in order to keep our license and our ability to do these audits. And they're constantly coming out with more standards. And as these standards come out, it increases the time that it takes to do the audit, because we have to follow these standards. And consequently, because it increases the time, it also increases the cost. And it's not just for us, it's for anybody doing audits. It could be our office, it could be any private firm. And so for that reason, and recognizing that those costs of audits are continually creeping upward, perhaps even faster than the revenue you receive to pay for those, the previous session, and back in 21, introduced the bill to change that threshold from $300,000 up to $750,000. Okay, because we wanted to provide more relief. That was the right thing to do. What we recognized in these past 2 years is that it just didn't go far enough. It wasn't enough of a change to really move the needle on providing that financial relief to local governments across the state. not just the water districts like yourself, but all other types of districts and cities as well. So this last session, we worked with some legislators to get that threshold changed again, and it just passed. That's Senate Bill 2180, which just increased that threshold to $2 million. So now it's substantially higher than the $300,000 it was just a few years back. Now, at the same time that it did that, the legislators made that change retroactive back to January of 22. And the reason that happened, the reason they did that is because that's when the $750,000 threshold took effect. So basically, it just kind of erased that one like it never existed. We didn't want all these levels of thresholds out there confusing people. So you can think of it this way. The threshold went from $300,000 to $2 million, okay? And that captured a lot of local governments that now no longer have to receive an audit that used to, several hundred in fact. And so, as I mentioned, several of you may now fall into that category. If you receive less than $2 million in revenue for a given year, you are not required to get an audit for that year. We also had in the Senate Bill 2180 an allowance for delinquencies and getting delinquent audits caught up. Now, just so you understand what we mean by delinquent, so we're on the same page with this word, is let's think of it this way. So we are in 2023. So right now, people would be submitting, if you're on a calendar year, which most local governments are, other than the school districts, those are fiscal year, which is June 30. There can be other fiscal year ends, but primarily most are on a calendar year. So your year would have ended in December 31st of 2022. You have basically until the end of this calendar year to submit either an audit report or an annual financial statement to our office for review. So that gives you a whole year to get it done in. That's how much time we allow for that to happen. So it's not actually delinquent. You're 22. It wouldn't actually be delinquent until the beginning of 24. So that's what we're looking at. But however, there are several entities, as Josh mentioned, that are delinquent. And if you find yourself in that position where you are, maybe you're several years delinquent, this change in the law allows you to get caught up. So even if it's a past year and you are under that $2 million revenue, let's say it's even all the way back to 18. Maybe you're really delinquent. You haven't submitted anything since back to 2018. This law will still give an allowance that we can get you caught up by just having to have submitting an annual financial report if you're under that $2 million for back then. So something to keep in mind. This is your opportunity if you are delinquent. And if you want to know, the best way to check is to go out to our website and you can see whether or not what the last one we have on file is that's been approved. You can find it on our website. If you go under local governments, a main menu at the top, one of the sections in there is when you do that, is to look up audit reports. And then you can see in there we have the next page is a list of categories, and you just go down to water resource districts and you click on that, and then alphabetically it lists all the water resource districts that we have audit reports for. Now, as Josh mentioned, if you are a component unit or if you are considered a component unit, you're part of a county, you're part of theirs, you won't see a separate audit report for yourself. You would need to look up and see if the county you are a part of, if they are current. Okay, so that's how that part of it works. So this is an opportunity to get caught up in that regard for those things. So I also wanted to, while I'm saying that, point out that Josh spoke a little bit about component units and how to know if you are one or not. Typically, it's up to your auditor to make that decision. However, it's also up to you guys as well to know, you yourself should know, am I a component unit or not? That's why Josh highlighted a few of those key factors that can help determine who is or is not a component unit, is to help you guys yourself should know, am I a component unit? Because that determines how you should be reporting. And more than likely, let's take the easier example. If your water resource district covers multiple counties or crosses over county boundaries and such, most likely you are not a component unit because your territory is such that it doesn't fall all within the jurisdiction of a single county. Okay, so you would be considered a primary government then you would be submitting, again, either that annual financial report or an audit to our office. We do not have to be the ones that do the audit. You can hire a private firm for that, but regardless, that audit report that private firm does also comes to our office, because all reports that we do not do, we review to make sure that whoever you chose as your auditor, if they're licensed to do government audits by the State Accounting Board, that they are following the same audit standards that we ourselves are required to follow. So we will review your audit report to make sure that it meets those standards, and then once we have approved it, then it's considered a completed audit. So those are just a few things I wanted to throw out to you for thought or for consideration at this point in time.
One of the things that Dan, he did not mention, Dan is the architect of 2180. He's the one that actually created all this great legislation. Those changes alone, based on our calculations, are going to save local governments probably well over $6 million a year by reducing those audit costs. And so that's a huge accomplishment in reducing the burden on local governments across the whole state. And those are all numbers. And Dan's like our human calculator in the office. We just throw stuff at him and he computes it and kicks out great stuff. So we would love to be able to answer questions if we have time, or if there are any questions. I mean, we don't have any cool things to talk about. I mean, I think the other guy had, like, he was telling you what kind of fish there were in places. I mean, we don't have anything like that, but anything at all.
You know, I don't know if I should be worried. I found that strangely interesting. I don't know what the rest of
Auditing is fun.
So those are, I have questions, so don't go away.
Okay.
Anybody else have anything to start with? If not, I'll start out. So on that component unit government designation, you listed about 3 or 4 different criteria.
Mm-hmm.
And so do you have to meet all of those to be considered a component unit?
No, not necessarily. Those are just 3 things I pulled out for consideration. I want to say the full checklist is, gosh, how many pages is that? Is that 7 or 8, 9 pages long of determinations? So your auditor, if it's not us, but they go through that, it's a pretty extensive evaluation just to make sure the outcome. They clearly understand how the structure should be. Those are just 3 areas where if you do have one certain setup versus another, that could be an indication.
It could be a combination of those different criteria that play into the
Could be.
decision. So it's not like a real easy.
No, and there's something we call auditor judgment, professional judgment that goes into a lot of these decisions and this checklist. So those are things, if you have questions, ask your auditor and ask them to help explain that to you. They should be able to do that.
So one other question I had to do is the annual financial statement. Is there a template or a form that
that's Dan.
easy to do?
Yeah, good question. I should have mentioned that. So also on our website, you can go, there's a directory for forms, and it's the only report form on there, and it's just a button that says annual report form. And it's an Excel file. It's simple to fill out, and all it requires is just to plug the numbers in from whatever financial statements, whatever financial system, accounting system you're using, and then you send your year-end bank statement. And one quick thing to point out with that is when you fill that out, for those of you that are considered small government, which is now under 2 million, you already know what the right answer is because it's a cash basis statement. So whatever your December 31st bank balance is, that's the right answer. So if you take the numbers off your accounting system and they match that, you know all the numbers are right. If it doesn't match that, which is often the case, unfortunately, for one reason or another, that's fine too. Just send us in. You can spend the time if you want to try and track down that $32 that you're off by. That's fine. But at the same time, you can just send it to us. If it's an immaterial amount and we can see that it's just some missing number somewhere, and we'll do a quick review of that, we'll just make an adjustment to make sure that they match and then send it back to you with the corrected number on there so that you can go forward. So don't waste your time unnecessarily for something that we can just easily make an adjustment for.
What's the definition of revenue? So we have a project that
Right, and so basically, anything you get is revenue. If it brings cash into your bank account, it's revenue. Now, we did also in this last session and in 2180, one other change that I had in that particular bill was that this was counted in the past and it never really should have been. So I clarified to make sure that it's not in the future, and that's pass-through revenue. I don't know if any of you receive that type of revenue, but pass-through revenue is when you receive money, but you only are receiving it so you can pass it on to someone else. So a lot of times that can happen with federal revenue or such, but again, that probably doesn't affect you as much, but we did take that out of the definition. Anything else you receive, if it's cash in the bank, it's counted as revenue.
Other questions?
The only other thing I would add is it's okay to call the auditor's office with questions. There has never been a question asked of the auditor's office that has led to an audit. That has never happened. So if you have concerns or you want to better understand, please don't be afraid to pick up the phone. Dan will be happy to answer any of your questions. We have a lot of other members of our team that would be more than pleased to try to help you better understand some of these financial requirements, because some of them are complex. So don't be afraid to call us. It will not. Even if we're not your auditor. If you have a private auditor and they won't answer the phone, call us. We will. We'll take it. So, but, ma'am, you have a question.
I was just wondering, you're talking about year-end financial statements and bank statements. I'm assuming it's a reconciled bank statement? Because you're going to have outstanding checks regardless, right?
Right, and that is one of the things on filling out the form. It asks that you've reconciled that bank statement so that it's the true number. You're right.
Good question. Follow up? You look like you have.
Are there a lot of, most water resource boards here do that? Do they need to, perhaps in the past they have, but they're within the threshold, they may not need to be spending these things, right?
Well, they'd still need to send us. So if you're under the 2 million, so that's now the magic number, $2 million in revenue. Under 2 million, if you report on your own, you're not part of another audit. So if you get audited with the county, that county audit's going to cover your reporting requirement. But if you need to report on your own, you're under 2 million, that's the form that Dan is talking about on our website. You go out, you can fill out that simplified financial form, turn that in with your last bank statement for the year, and then that's how we'll evaluate. Just again, as part of our requirement under state law is we have to verify some of this financial information. We do then scan it in. We make it available electronically. But if you're over that 2 million, that's when you'd need to potentially have your own audit. So
So if
that
I
might.
want to go in and look at Burley County's water resource district financial statements, there'd be a list there, and I could click on it, look at it, see what they're doing every week.
I believe in the past, yes, but I think this year Burley County Water Resource District now, they did get their audit, I believe, with the county. So they won't maybe have their own. You'll have to look at Burley County audits.
We're always cleaning right now.
So,
If they're discreetly, maybe explain that.
oh, go ahead, Dan. Yeah, Dan can explain a little bit more.
One extra caveat with that is that as a component unit, if they're with the primary government, like the example with Burley County, back to that, there's one of two ways, and again, there's a kind of a checklist to determine which is the right way, but if it's discreetly presented, again, using accounting jargon, but if it's discreetly presented, then that means it would have its own separate column in the financial statements. So then that level of detail would still be there. Now, if it's what's called a blended component unit, then it's just thrown in. Those would be the small ones where they're not materially significant. So because the amounts are so small, they just throw it in with the county stuff. But if it's a bigger one, and obviously Burley County Water Resource District is a bigger one, they would have a separate column, and you would still be able to see that information in Burley County's audit report.
Good question. Hopefully we're not losing people when we start talking these more technical stuff, but great question.
One annual comments we get is just the two-party review of financial transactions. Like we don't have staff, permanent staff to be able to have that objective or second-party
So I think maybe if I'm understanding kind of where you're going, so a lot of these audit reports will see a finding, and we're required by standards to issue that if there isn't the necessary preparation of the financials and the auditor's office has to help. We call that just FS prep finding. That is actually very common across the state of North Dakota. We see that in a lot of small government entities because they just don't have the resources to have the proper segregation and the financial knowledge within that entity to create financial statements. Is it a huge concern? No. I mean, the auditors are there to help, but if they do help prepare the financial statements, that is a potential impairment to independence, so it has to be reported on, is all. And we just have to basically identify that assistance was provided. That cover that, Dan? I mean, Dan has more.
The only other thing I would add to that is, along with that segregation of duties, part of that is the control that you put in place to approve transactions, that you'd mentioned. And so, all we ask, and a lot of times that's another common finding that you see in the audit report. We understand that some entities, you only have a couple people in your office that run this, sometimes only one, and then you kind of have to tap into the board members to maybe oversee something, whatever. That's all we're looking for, to do what you can. We understand that some smaller entities, you just don't have the staff size to be able to segregate all those controls and things like that you should be there to make sure that things are being done properly. You just do the best you can with the amount of people you have.
I would say if you see an audit report, and I call it a clean opinion, but they might have two findings, and it's probably financial statement preparation and segregation of duties. To me, that's a clean audit, especially when you look at the size of some of the small governments that we have. Just because of their structure and some of the resource limitations, those findings are almost automatic, but they're not a concern.
Do you do performance audits on anything else like TV?
That's a good question. Not typically. I think we potentially could, but for local governments, our focus is financial statements because that's what local governments need to work with potential lenders and their other stakeholders and their partners. So again, we try to provide the audit tool that is needed by the client. We do performance audits on state agencies because state agencies have financial statements. That's what we audit as the ACFR, the Annual Comprehensive Financial Report. State agencies don't have financial statements individually, so that's why we use the performance auditing standards for them.